Carnival Cruise Line raised its full-year earnings forecast for the third straight quarter, citing a record pace for forward bookings and improving net yields. So what's the stock do? It trades off 3.5%. Go figure. Maybe our next guest can help us out here. Brian Egger, he covers his gaming stuff, the lodging stuff, the cruise stuff, all the fun industries out there. He's been doing it on Wall Street for a very long time, one of the top folks in the street in his industry. He's Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio. Brian, Carnival, it seems like, pretty good quarter for them. What'd you hear?
Yeah, very strong third quarter. You know, they're 50% booked for next year. So on the surface, these results are really good. And it was initially a bit of a head scratcher to see the sell-off. I think there are two ways in which maybe they're being perceived as conservative. The one is that their yield growth guidance for the fourth quarter, while it's certainly very solid in there in the mid-fours, you know, it's a little bit below consensus. Maybe the street got a little bit ahead of itself. The second thing is, for all their optimism about bookings and direction of yields, they are very conservative in how they're deploying capital. They've only got about 1% annual yield growth for this year, the next 2 years. So they're growing very effectively, but they are also very measured in how they deploy capacity. So all this is really good, but they do mention that, you know, they can really be judicious on expense growth because they're only growing capacity at a very modest pace.
Is that a bad thing to be conservative? How does Carnival compare with Norwegian or Royal Caribbean?
Yeah, so if you look at Norwegian, Royal Caribbean, they're anticipating or actually scheduling about a mid-single digit, call it 5%-ish level of annual capacity growth for 2026, 27, 28. You know, it's closer to 1% for Carnival, maybe 2% in 2028. So they're just taking a more conservative tack. And I think they're equally long-term optimistic about their ability to penetrate the vacation market, but they're going about it in a much more measured way. And in that sense, it could strike people as conservative.
Talk to us about capacity. I mean, if they added a couple of ships, would they sell them out?
Yeah, I mean, certainly their occupancy is back to pre-pandemic levels. Their yield growth against that capacity increase is positive. And we've seen steadily increasing yield expectations throughout 2025. And they've got the free cash flow, but I think they just want to build this out slowly, you know, and maybe strike some people as being too slowly.
Hey, not for nothing. This CEO got paid a lot of money here. Josh Weinstein, $14 million in cash compensation for calendar year 24, $14 million in stock, $28 million to drive a cruise ship around. That's not too bad.
Nice job if you can get it, right?
Not bad.
So here's my question to you, Brian. How do Royal Caribbean, Norwegian Cruise, and Carnival, how do they grow their market? Are they stealing from each other, or is there still a big base from which to grow? There's
definitely a penetration opportunity. Let me just back up for a second on Carnival. You know, their goal is to become investment grade. So part of the conservatism I think you're seeing, which may be a head scratcher, is they want to get to investment grade. And I think that's probably priority one, shifting some of the enterprise value from bondholders to equity holders. That being said, yes, they see opportunity to grow a relatively underpenetrated overall vacation market, but they're going about it with kind of balance sheet being front and center, if that helps at all. Yeah.
The only thing I know about the cruise business is what I learned from Disney, who got into the business 15, 20 years ago, and it's been a great business for them. How do you stratify the cruise market? Now, I'm going to be at the very, very top, mind you, but how does the cruise industry kind of stratify itself?
Yeah, I mean, I think they convincingly argue that they are a relatively affordable form of vacation. It's a package product.
Yep.
The value is very good for the consumer. But it runs across different tiers, from luxury side, you know, Seabourn, Windstar, Oceania, Regent Seven Seas, to the more mass market like Carnival Cruise Line, right? So they run the gamut, but the overall spectrum tends to be generally, you know, relatively affordable, and part of that package vacation product, people buying cruises beforehand, buying stuff on the cruise with a good share of wallet left over, you know, that works to their favor.
How brand loyal are cruising fans? I mean, if you are a Carnival person, are you a Carnival person for life?
Yeah, there's certainly some brand loyalty. And remember, they've got kind of, as an industry, companies got two goals. One is to drive bookings for their particular brand, and they do that through new hardware with all the bells and whistles. The other is to drive the overall awareness of the value of cruising relative to other forms of vacationing. And so, you know, they've kind of got that dual mandate.
So you're sitting on the Jersey Shore Sunday afternoon around 5, 6 p.m.
So if you're Paul Sweeney sitting on the Jersey, okay, go ahead.
All this, every Sunday during the summer, you'd see this massive cruise ship coming out of New York Harbor. I think it's the Star of the Seas.
Yeah, that's a new one. Yep.
I mean, thing's massive, dude. Yep. And they filled that thing up.
Oh, just remember that that's a Royal Caribbean ship. But I will point out that one of the things Carnival's pointing to is, they reached a 13% return on invested capital this year. So they're kind of getting to that double-digit return pace that they targeted. So their argument would be that they fill it up, they get good pricing, and relative to their investment, they're getting solid low teens returns on incremental invested capital with an opportunity to take that higher. So as long as they can get that return, I think they can convincingly say we're getting there. But obviously, in the case of Carnival, through relatively conservative capital deployment.
I mean, star of the sea, icon of the seas. They have a massive passenger capacity with the ability to hold over 7,600 passengers and a large crew. Man, for somebody who doesn't like people like me, that's a tough sell.
No, it's not the misanthrope's favorite vacation activity, but they do get good economies by absorbing those fuel costs. And
how big those things are.
Well, I'm always talking with my friend who suggests that instead of retiring to a nursing home or a retirement community, just go on a cruise ship.
Yep,
I've heard that
too. Who's a big cruiser? Charlie Pellet. And he doesn't like cruise the Caribbean. He always cruises like
adventurous places.
Yeah, like I'm cruising to Turkey and I don't know, Antarctica.
The exotic itineraries. Yeah.
Yes, that's what Charlie.
People pay a premium for those.
Yeah.
Oh, so he's that kind of cruiser.
Yeah, well, I'm just saying, on average, the customer pays a premium for
You talk about going investment grade again. Day one or day two of the pandemic, who were the first companies going to the bond market? The cruise industry, because those companies knew, oh boy, this is not going to be good for us.
Well, we need this back from that brink, and therefore trying to run the business in a measured way.
All right. Makes sense.
Good stuff, Brian. All right, Brian Egger, he does all that gaming stuff. He does the lodging. He does the cruise ships, all the fun industries out there.
The vice industries?
Yeah, I don't know.
You should cover cigarettes, too.
Yeah, but I mean, these are good industries and great. I love the economic models for these.